Welcome to Cattle Call, a production of the Nebraska Rural Radio Association. I'm Chad Moyer. Cattle Call is brought to you by Wolf Auto, small town strong. Joining us on today's program from Kooima Kooima and Varilek there in Sioux Center, Iowa, it is Joe Kooima. Joe, thanks for joining us here today. Glad to have you on the program. Before we talk about this week's markets, which actually looks like we're starting to see some of the first trades take place here midweek, but let's just go back to last week. Again, a nice jump in the cash cattle market. Recap, how did we get to that point? What kind of facilitated that nice jump higher last week?
It's a great question. Thanks for having me on today in place of Brad. I'll do my best here with everything. I think we can kind of back up even like 3 weeks ago, when we had really one eye, both eyes, I should say, on that stock market. That's all a guy needed to know. You come in here every day and you figure out, okay, stock market's down today. You expect kind of a down day. So I think that was a lot of what was the problem in the marketplace 2-3 weeks ago, and we saw that cash drifting. But last week was the first time in several weeks, that we had a good divorce from the stock market. There's a couple days last week, the stock market was a little bit rougher, but the fundamentals just started to ring true. And when you have a jump like that in cash market from $5 to $6 to $7 higher than the previous week, it's definitely pent up. Maybe we shouldn't have had that cash, quite a bit lower from the week prior. But in the circumstances, that's just how it fits. It's a money flow market. We still have one eye on the stock market, even today, and even at the beginning of the week too. But that's always where a guy starts. But it was a good week last week to see the Packers come to the table. It just kind of rings true with the fundamentals that we do have here in the north and in the south, just some tighter numbers all around. So I think that's kind of where it basically started to. There's a lot moving forward here too, and I know Brad mentioned it last week too, that this is your spring move for beef demand. We start racking that up here pretty good. The Packers are aware, and this is where they have to make sure that they have enough cattle to meet that demand, because we're coming up on peak seasons here. We got back-to-back holidays coming up. It seems like it's a ways away, but in reality, it's not for the Packer. And then you got some summer demand that comes a little bit later too. So this is a time that they kind of make sure that they have all their quotas met.
Joe, do you have a sense of kind of where the Packer sits, based on what's been kind of committed and what might be out in front of us here? What is kind of the situation of the marketings right now?
It seems like last week, obviously the Packers had to show their true colors with chasing cattle that way. And I think they got away with it the prior week, or the couple prior weeks to that. And I think it's kind of the same thing. I mean, the show list here in the north, even if we don't move the whole show list, if it goes into the next week's show list, it's just nothing compared to what 3, 4, 5 years ago we're worth at all. So it's just close to the knife for these Packers. I think they kind of know it as well. They've tried throwing kill cuts at this marketplace for the last 2 months, and that might bode well for a little while, but it just can't contain the underlying demand out there for beef, and the Packers just making sure they can get enough of it. As far as the commitments go this week, I'm not quite sure on that number, but it just seems like hearing from customers last week, so-and-so are driving around, Packers are out looking around. I mean, it's kind of the same vibe again this week again.
All right. Joe, last week we had a listener or a viewer question pop up, and if we can go ahead and throw that up here. Is importing grind good for the cow-calf and feeder market in order to help keep demand up, or should we take every dollar we can now and kind of let tomorrow worry about itself? Great question from one of our listeners, one of our viewers. How do you respond to something like that, Joe?
I got a few notes kind of written down. I'm going to kind of break it into a kind of a two-part there. The first part about is importing grind good and overall for the cow-calf feeders. This importing the beef, this is nothing new in the beef industry. We've been net importers the last little while. It speaks volumes to the demand that we have. Let's take a look at maybe some of the grind beef that we have, the 90% and above, maybe some of the 93s. We're actually over the prices over a year ago. So in this case right now, it is a good thing to keep having some product come in from outside the country to kind of keep the prices where they're at so they can move. We don't want the consumer to be shocked too heavily if we have a big jump, especially in the heart of demand with the ground beef moving forward. So in this case, it's really good. The second part of the question about, do we got to, take every dollar we have? I guess I would broaden that a little bit and just say, hey, let's stay current. And we have no problem doing that because of the lack of numbers that we have, but let's not get carried away and that we have to keep cattle because we want a higher price again the next week. The market doesn't have an opportunity to market things higher the next week at all. So that's basically telling you to stay current. Our beef production, when we look at just the beef production itself compared to a year ago, we're very similar. Every other month we might be 1% more or 1% less. Our kill numbers are down 6 to 7%. So basically, right there's a fine line of having too much production or too many cattle, and sometimes not enough. And that's always a very fine line. So as long as we take care of that, take care of ourselves, and just stay current, we're going to be a lot better for the cattle that the guy has behind him.
Right, very good. Joe, thanks for responding to that. And for anybody that would have a question related to something that we're talking about here today, or doesn't have to be that way, it could be off topic, by all means, put that in the comments and we'll pick one and we'll answer it in next week's Cattle Call program. Joe, let's talk about what's going on this week. And here we are, midweek Wednesday, middle of the day. You made mention before we went on the air here that, yeah, we are starting to see the first few trades take place. What's going on in the cash market this week so far?
Yeah, we have a little bit of cash out of the South to kind of confirm this aggressive move in the futures, which I guess talking to some customers today when this market was screaming higher right away, I'm like, let's not get ahead of ourselves here on a Wednesday, because typically we don't see the cash cattle trade develop until Thursday, Friday, and the longer we hold out, usually the better we can get. But like we mentioned, at the first part of this program, the stock market, Monday we came in here, the stock market was a little bit lower. Cattle market shot higher because of the on-feed report and playing a little catch up to the cash that happened last week. And we quickly faded that due to the fact that our S&Ps and Dow Jones was lower. But Tuesday come in here, stock market's higher. Last night, stock market gapped open higher again, and we gapped open higher in the cattle this morning again into new contract highs. All right, so that helps out dramatically when we can have the money flow playing with us in good fashion. But sometimes we can get ahead of ourselves here on a Monday, Tuesday by expecting too much. But it's nice to see a little bit of cash market. I'm not going to say it's a beginning. It's a good start, but it's some 213 down in the South, which is $3 better than last week. Yankton was getting along pretty well Tuesday morning, kind of call that 2 to 3 higher. So we do have a good firm undertone in this marketplace to kind of drag this out into Thursday, Friday to see what we can get for some cash cattle. So I expect the North to probably follow suit with the South and try to achieve that 3, if not more, for the cash cattle this week.
Yeah. And just on that note, wrapping up that thought, what are the keys to seeing that cash trade develop here in the rest of the week? What are you going to be watching?
Well, the stock market again, but I think since last week we kind of flipped the table here. We got the leverage back in the feedlot, which is a great thing. That's also one of those phrases that the leverage is a fine line, to have, and we have it on our side right now. So let's utilize that. Let's make sure we get what we can get for cash cattle, but also be smart with it. The production is compared to a year ago is there, so let's not get carried away by any means. Let's keep things moving a little bit, but that would be your key component right now. If the stock market can leave us alone, I think we'll have another great week in the cash.
All right. You did mention one thing, and we should probably mention on it, and that's the cattle on feed report that came out last week. Any takeaways? I've heard a few people say, hey, there's a hint of heifer retention in the cattle on feed report, but what are the takeaways from that maybe we should just keep in mind?
Overall, another great question, but overall it was very, neutral kind of report is kind of one that kind of like to see on the backing of a big jump in the cash market, because that means there's no big surprises. And into the next week, we can talk about, the true fundamentals that got us to that higher cash point too. There's some talk of some heifer retention, and boy, that, trying to come up with a chart or anything like that with, are we doing it? Or are we not doing it? That's a tough thing. These cow prices are tremendous price. I wonder if some of those cows that look at a producer wrong, if they're going to be shipped to town because they bring a good paycheck, and then they might have some heifer retention that way. So it's going to be a pretty interesting dynamic out there. And you also got this drought that's still, well, I shouldn't say drought, but we're getting some rain here the next week, but the extended forecast don't show a whole lot of promise of any precip. So that's just going to add some more questions if it's going to happen or not, if they just continue to ship those heifers into the auction barns because they don't have enough grass. So in the bigger picture, I think just with the prices where they're at, it's just going to be a very slow progression with it anyway.
All right. Joe, I appreciate your time. Thank you so much for your expertise. And again, that's Joe Kooima and Varilek there in Sioux Center, Iowa. This week's Cattle Call is brought to you by Wolf Auto, Small Town Strong. Thank you so much for joining us on this edition of Cattle Call, a production of the Nebraska Rural Radio Association. I'm Chad Moyer reporting.